Okay, we can start now. Can everybody hear me?
Okay, yeah.
Okay, perfect. So today's webinar is about mortgages essentials for the realtors, because realtors and mortgage brokers, they have two sides of each coin. So the more realtors know about the mortgages, it's easier for them to handle all deals. My name is Branko Kovačević, and I'm a mortgage broker with Mortgage Center Canada. So let's start with some context of this webinar. First, we'll talk about the mortgage essentials, how to process the client who bank rejected for the mortgage market overview. Then we'll talk about the real estate market and mortgage rate prediction for the future, and tools and strategies to add some additional services and value to the customers. And then we'll leave some time for the Q&A. We have somebody else coming in. Tanya. Sunny. Okay, welcome Tanya and Sunny. And the last part of the webinar will be some time for the questions and answers. In the meantime, if you have any questions, you can just shoot me in the text message or whatever. So types of the mortgages that we have in Canada. We have fixed mortgage rate. That means the rate remains the same and the monthly payment throughout the term. A term is the contract that client will sign with a bank. Usually it's a 5-year term, and everything stays the same. Variable rate, interest rate, and the monthly payments, they are following fluctuate with the market conditions. The third one, very few people know about it. It's called fixed payment variable rate. That means the payment throughout the term stays the same, but interest rate will follow the market condition. Just to give you example, so if the rate is high, mortgage payment will be the same, but higher portion of the mortgage payment monthly will go towards the interest and lower portion towards the principal, and vice versa. If the rate is lower, client will pay more of the principal and less for the interest. So on next slide, we'll see two lines, 5-year fixed rate versus 5-year variable rate mortgage. So historically, this shows the variable rate has a lower monthly payments than fixed rate, but anyway, 76% of the clients will choose fixed rate because they get some kind of stability. It's a major purchase and they want to gamble. They don't want any surprise at the monthly basis. Only 18% of the clients will choose variable rate and 4% some kind of hybrid option. Another essential part of the mortgage is also the term. It can be from 1 to 10 years. Most of the people go with a 5-year term. Longer term gets you stability, and shorter term which gets you more flexibility. So just example how important is actually next one is actually amortization. That's a 25 years average in Canada. That means the time period the mortgage will be paid off. Now, if the down payment is 20% or more, we can stretch the term to 30 years. And recently we saw some examples of 35-year amortization. Just give me 1 second. I have some more people coming in. second. You have trouble letting people in right now. Sorry. Give me 1 second. This is some technical difficulties here. I just can't let people in about it. You know how to let people in here. Okay. Hmm. We're going to continue. Give me 1 second, please. So I believe everybody is in right now. Sorry about the delay. And let's continue about amortization. Just to give you an example, if amortization is 25 years for the mortgage of 300,000 and interest rate of 6%, monthly payment is roughly $1,800. But if you shorten that amortization to 15 years, the same mortgage, client will save approximately $110,000 on interest alone. So the longer amortization gets you lower monthly payments, easier to approve. Short amortization, client will save money on interest. So that's why it's important to tailor the mortgage for each customer differently. Type of insurances that we have. Each mortgage can be insured, non-insured, or insurable. By the law, every mortgage with down payment less than 20% has to be insured through one of the 3 insurers that we have: CMHC, Gamma Canada, or Canada Guarantee. For the just example, for the 5% down payment, default insurance is 5%, 4%. For 10% down payment, insurance is 3.6%. For 15%, it's 2.6%, and for 20%, it's 2%. That insurance can be either paid in cash or can be added to the mortgage payments and stretch through the whole amortization period. Federal government also have a new policy for energy home efficient properties. They'll give discounts up to 25% on default insurance. So it's important for the realtors to pay attention for those like a certificates that can save money to clients and maybe easily sell the property as well with that certificate. The importance of the down payment and proving that to the lender, it's usually the biggest reason mortgage approval gets delayed, because lenders want down payment to come from their own sources. They don't like to give credit on top of the credit. In order for us to prove that down payment is coming from their savings, we usually have to provide 90 days bank statement for the account that down payment is coming from. If the money is not on account for 90 days, still it's not a problem, but we have to provide additional documentation, bill of sale of the house, or like personal items, or car, or something that's showing that money is actually clients. And third way, to get a down payment can be gifted from immediate family as well, and most lenders will accept that as well. So from realtor's point of view, why is the pre-approval so important? It avoids wasting time for the clients, realtors, and sellers as well. Pre-approval gets you buying power, so you'll search and look for the properties that fit in the buyer's budget. You don't have to disappoint them and then just look at the lesser house if their expectations is high, minimizing the risk of deal being collapsed. And in pre-approval, we can often ask for the rate hold, especially important in today's market. The rates are on the rise, so we can get a low rate for the buyers and to put some kind of little pressure on them. They have to pull the trigger within those 120 days, otherwise they'll lose those better rates. Also, Government of Canada has a couple of programs supporting and helping buyers to get into the real estate. First, the most popular is first-time home buyers. Purpose of that program is to help buyers get their first property by putting 5% equity on old houses, used houses, or 10% of new construction. That means government will own either 5 to 10% of equity, and the client has to pay that back in 25 years, or if they sell the house in meantime, it has to be paid. Doesn't matter how much government put money down, it has to be equity, either 5 or 10%. But benefits for the buyers is they can easier qualify, and monthly payments are lower. Second program is HBP that allows clients to pull up to $35,000 from RRSP for the primary residence. As long as they return that money within 15 years, they don't pay taxes on it. And third program is Rural North Housing Program as well. So we can get to the big one now. What we do with the clients who get rejected by the bank. That happens very often, especially with those high interest rates right now. The major bank present the offer, major bank rejected the client, and then you ask mortgage broker to help you. What mortgage broker do first is try to find a lender. There's over 50 lenders in the market today, and they all have different policies. They have preferences. Most people think all the mortgages and lenders are the same, but it's a huge, huge difference. Some of them will prefer, this type of a client, another this type of a client. So just to give you an example, self-employed clients usually don't declare all the incomes they're making, and it's hard for them to get approved to the major banks. So then mortgage broker can look to the lender to accept stated income. That's income the client is actually stating it's making minus the expenses, and we can use that for the approval. Or the next big one is rent. Most of the lenders will ask the rent to be deposit in client's account last few months, or if it's a longer term tenant, they even ask for T4 to support that claim. There are a couple lenders will accept only lease, and it's easier to get this client use that rental towards the qualifying income as well. And some lenders will use only 50%, some 80%, and some even 95% of that rent towards the income. Next step will be to find B lender if A lender doesn't work for the client. It is very important to explain in plain language to the client, this is only temporary solution because rates are higher and there's a fees involved as well. So working with the clients from the day one with the exit strategy, meaning three major components of the mortgage approval: credit, income, and property, helping them and working with them so they'll be ready at the end of the term to switch to A side, which is actually everybody's goal here. Next, we come recently about it's a bridge mortgage. If the client sold the property and they bought a new one, it's very easy to get a bridge. But if the client don't have confirmed sold property and they bought a new one, for that short period of time, you can find the private lender will finance that bridge, and then when clients sell their property, we just switch them to A side. And if nothing works for that client, then we work with them to improve their credit score and purchasing power. As soon as they are ready, we turn them back to the realtor and they can start process looking for the house from the scratch. Okay, so talking about the mortgage rate. So we have often that question, what is the fair market value for the mortgage rates in Canada? Because they kept changing, and this is the big subject among most of the clients right now. Investors, they have an option to buy either 5-year Canadian bond yields or mortgages. In order for them to that mortgage product be attractive, that spread between mortgage and yield, 5-year yield, has to be an average 1.56%, and give us to the mortgage rate. So recent time we saw that Bank of Canada didn't increase overnight rate, but mortgage rates they're still on the rise. The reason is that some things Bank of Canada doesn't control, and that's inflation. So investors, they don't want to buy the product low rate and the inflation is higher. So that's the reason that spread has to be 1.56%. And in order to calculate that, we can do mortgage rate today, the bond rate today is 4.123% plus 1.569, because exactly at 4.59%, which is the fair mortgage rate at the moment. There are lots of lenders on the market. Sometimes they have specials, they have some money sitting on their account, they wanna buy some mortgages, and we have specials. So right now, the 5-year rate fixed stock is 5.49%, and variable rate start 6.1%. So this is the easiest way to calculate the mortgage rate. You can just follow Bank of Canada or some other reliable source and see how much is the bond, and just add that 1.569 spread, and it gives exactly what the fair market mortgage rate for 5-year mortgage should be. Mortgage rate influence the real estate market a lot, not just the volume and the sales, but also affordability. This is HAI, which shows housing affordability in Canada. And last 80s and 90s, they're just going up and down. Right now, it's fairly low, but prediction is they are just going down, and hopefully more and more Canadians will be able to afford the house in near future. Also, since you're realtors, you probably know all the stats. The mortgage rate influences the average price of not just the volume, just average price in the real estate market. For example, in January 22, average price was $816,000, and then interest rates start rising. In June 22, the price dropped to $665. In January 23, even dropped to $612. Now market is a little bit recovering, and it's now $650, according to the stats from the last August. So interest rate and the housing sales and the price goes hand by hand, as you know already. So we come to the $1 million question now. When is the right time to purchase the property? Ideally, clients would like to get the property at the lowest possible price, and the mortgage rate in near future as low as possible. So we have some predictions here, forecasts from Bank of Canada. It shows you 2023 all foreclosures interest rate were on a rise, but prediction for the next year, starting first quarter, interest rate is slowly starting going down. So if the client asks you, so you can just pull some stats and show them that the prices of the houses are fairly low right now compared to the last year and a half, and mortgage rates, they are high, but in a near future, predictions they'll be lower and lower. So you can just give them those information, they can make educated decision. So what are the tools that we can use to boost up our business and, make some more money at the end of the day? We'll present some strategies and tools to get fresh source of leads from our experience. Cooperation between mortgage brokers and realtors, it is important, not just to trade the clients, just go beyond and have some presentations together and exchange multiple presentations. One side of the coin is mortgage broker, another one is realtor. So if we do presentations together, realtors can explain realtor side of the market, and mortgage brokers can explain the details about the predictions in the mortgage market as well. We suggest organizing some events online, and one good one is LinkedIn, because they allow us to invite up to 1,000 connections per organizer. And if you have any questions about those strategies, just please feel to shoot me a text. So since we live in a digital world right now, let's talk about digital platforms. One of them, most popular with us mortgage brokers, is the Canadian Mortgage App. This platform is designed to make cooperation between realtors and mortgage brokers. It's sponsored and paid by the mortgage broker, and realtor's information will be branded on that application. So what are the benefits for the realtors? Clients, they can send that application to the client. The client can check their purchasing power. They can apply for the pre-approval. The realtor will get that information right away. And it's a very good source of leads. And also, realtors can build in the additional services. They can build a calculator in their website, mortgage calculator, and affordability. So there'll be clients, realtors logo and realtors information on that mortgage app. So if you have any questions or comments right now, feel free, please. Okay, I have a question here from Igor. Which one is better, variable or fixed rate on today's market? Well, in my opinion, when the rate is low, we used to have 3 years ago, 1.5% or 2%. It's better to take a fixed rate and lock it for 5 years. But when the interest rate is high, in my opinion, variable rate is much better, because we're expecting those rates to go down, and over time, client will definitely save money. It's only 80% clients that are taking this advantage of the variable rate, but in my opinion, that saves you money over time if you like to take a little bit of risk there. Just give me 1 second of question here. I'm going to stop sharing here. Yeah, and Courtney asked a question. Does the insurance premium refund of 25% apply only those homes with certificates? Yes. After deal is funded, then client can apply through CMHC for that refund, and only with those certificates they can get up to 25% of the reduction in the premium for the default insurance.
Thank you.
You're welcome. Another question here from Richard. Writing an offer for the pre-approved clients, do we have to put subject to financing? Absolutely. In a mortgage approval, bank will look for the client's credit, income, and they look for the property as well. So two of those bank already saw but didn't see the property, so it's absolutely necessary to put a subject to financing. Although client is pre-approved, bank has to approve the property, has to meet their guidelines as well. Okay. Any more questions, comments, suggestions? No. Okay, one more question here. How long will it take to get approval? Well, mortgage brokers like to see 10 business days. Give us enough time. If the client is pre-approved, all documentation you already have, it's shorter, but 10 business days, it's kind of like a industry standard for the offer. Okay. Well, if there's no other questions, I'd like to thank you all for joining today's webinar. And if you have any questions, you have my email as well. Feel free to, shoot me a text message. We can organize another one with the realtors and the mortgage broker combined.
Thanks, Branko.
Thank you very much.
Thank you very much.
Thank you.
Have a good day.
Have a good day to all. Bye-bye.
Thanks. Bye.